Scalpers operate on an extremely short time horizon, often holding trades for just minutes or even seconds. This video is part of our Trading Styles Explained series. You can check out the full series in our YouTube playlist. Scalping is a fast-paced trading strategy that aims to profit from small price changes with a focus on speed and high trading volumes. Scalpers believe that it is easier to capture small moves rather than large ones, and they make numerous amounts of trades each day to accumulate gains. For instance, if you were scalping shares of a company, you might buy shares at $10 and sell them at $10.05 for a small amount of profit. Instead of looking for large moves in price, you continuously repeat this process multiple times throughout the day, accumulating small gains, which in return potentially add up to a significant amount. To give you a clearer picture of scalping, we will evaluate it based on these specific trades. These trades help us understand the intricacies of this intense trading style. While the risk on each trade is theoretically lower due to targeting lower price movements, the overall risk of using the scalping method can be quite high, especially for inexperienced traders. The high frequency of trades and the usual need for significant leverage to make meaningful profits, and of course the trading costs that can rack up quickly due to the large volume of trades. If these factors are not managed properly, it could blindside new or inexperienced traders. Scalpers operate on an extremely short time horizon, often holding trades for just minutes or even seconds. Their success does not depend on long-term trends, but on the ability to take advantage of small fluctuations that occur frequently throughout the trading day. That would also mean that the trader is required to stay engaged, constantly monitoring market movements and waiting for the optimal time to enter and exit their trades. Unlike other styles where you have the luxury of stepping away for extended periods of time after entering a trade while letting the market do its work. To put it simply, because each trade is held for such a short period of time, paired with the high volume of trades that is going to be taken, scalpers must be prepared for each trading session, often dedicating several hours of their undivided attention to their screens. It is a very active and hands-on approach to trading. When it comes to capital requirement, there is no hard and fast rule or minimum amount to start trading, but here are some considerations when adopting the scalping strategy. Leverage. Scalpers often require higher leverage to amplify their trading capital. While this allows the trader to have a smaller capital outlay, it also increases the risk of losses. Trading costs. Due to the large amount or the large volume of trades that is going to be taken, transaction costs can accumulate very, very quickly. Scalpers need enough capital or profits on each trade to cover these costs and still achieve profit. Market selection. Some markets require larger capital due to the size of standard contracts, such as futures or lot sizes in Forex, while others may allow trading in smaller increments. In terms of skills, aside from having a strong grasp of technical analysis methods, scalpers need to make fast decisions regarding entries and exits, usually within a matter of seconds and minutes. Discipline is also paramount to a scalper's success. To have a strong adherence to their trading plan and risk management rules is crucial to avoid significant losses. Emotional resilience as well as stress management are often overlooked as well. Scalping can be very, very intense, considering the focus required to stay in front of the screen for extended period of times. And going on a losing streak can be very, very demoralizing as well, and often creates a lot of psychological and emotional toll over time. Some usual strategies and analysis methods that are popular among scalpers are momentum scalping, where trader aims to take advantage of the market momentum within the short time frames, and the moving average crossovers, where using two moving averages in different time frames crosses on the chart, signifying a shift in market momentum. Understanding candlestick patterns is also very useful for traders. Reversal patterns like the doji, hammers, and shooting stars, which indicates immediate or imminent market shifts, is also critical in helping traders identify optimal entries and exit points. The time frame and charts used for analysis. Scalpers utilize the lower time frame charts, like the 1-minute charts, for analysis. These short time frames allow them to identify the minute-to-minute price changes that are the lifeblood of their trading methodology. Some will opt for the 5-minute or higher time frames, usually up to 15 minutes, to filter out the noise or insignificant price movements that is usually present within the 1-minute charts. The scalping strategy favors markets with high daily volatility, liquidity, and trading hours. Here are some common markets that traders use for scalping. Forex, with its high liquidity and 24/5 accessibility, it is always available for scalpers. Certain currency pairings have high daily volatility, which is highly favored as it provides more trading opportunities for scalpers. Gold. The price of gold can be influenced by various factors, including the strength of US dollar, interest rates, geopolitical tensions, inflation expectations, and shifts in demand for the safe haven asset. This multifaceted nature can lead to diverse trading opportunities. For our trader spotlight, Al Brooks, a professional trader with a background in medicine, who pivoted his analytical expertise to the markets, becoming a leading authority in reading price action. While he's not tagged as a scalper, his approach and expertise in price action is highly relevant to all traders who want to look into scalping as a strategy. To be able to dissect and understand the story and behavior behind each price bar or candlestick is invaluable for scalpers who seek to make a quick and informed decision. If you're considering scalping, it is essential to have a robust trading platform with low latency, have a trading plan, and practice strict risk management. Due to the high-speed nature of scalping, it is important to stay focused and disciplined to make the most of this trading style. That's all for this video. Thank you for watching. You can check out the rest of the series on our YouTube playlist, Trading Styles Explained. If you want to learn more about trading fast and trading smart, check out Mitrade Academy, where we deep dive into the world of trading.